Hey everybody, Dr. Richard Smith here with the Foundation for the Study of Cycles and Cycles TV. Good to be back with you again this week. Last week was a pretty wild week in the markets and not really what you'd expect in the summer doldrums, but volatility was moving and markets were on the move, and started out the week great for my personal hypotheses and then came under pressure later in the week for me. But we'll get into some of that today and take a look at what's going on in the markets. I have been for the past few sessions working on building a portfolio inspired with cycles trades and aiming for diversification and free exposure. And I've been sharing some of my tools from RiskSmith along these lines. Really cool stuff. I hope you've been enjoying it. And we are going to continue in that theme today. I've been scanning for cycles, looking for new ideas in stocks and ETFs, etc. Going to be sharing some of that with you today. And I continue to really want to hear from you. What ideas do you have? What ideas do you want to look at? Because I'm on the hunt. I'm on the hunt for ideas and to integrate into a well-diversified, cycle-infused, cycle-informed portfolio that we can hold for a year or more. So excited to continue to dig into this with you today. Please make sure you join at the beginning of the session, because that's where I'm going to take your ideas and explore them and see if they can work their way into the portfolio. So going to get going here, but please let me know what's on your mind, what you'd like to look at, what you're interested in, what you think might be a good idea over the next year, and we'll subject it to our cycle analysis and other tools and see if we can put together a really interesting portfolio. Great to see everybody. Andrea, Bruno, Gray, thanks for joining. And again, please do share your ideas. Meanwhile, let's dig in. All right, so I was just here building the, this is the current portfolio that we've been working on. All long positions here, intended to hold for about a year. We got Berkshire, DBA, O. O is, this is in RiskSmith, Realty Income Corp, right? Okay, and then we've got TLT, the dollar, and XLP, which is consumer staples. So I was just building out this watch list. I think I got DBA added. Yes, I did. So let me just finish this up. 20-year treasuries, TLT from Yahoo Finance. Going to add that to the portfolio watch list here. And then there was US dollar, EUP, also from Yahoo Finance. And lastly, XLP, which was consumer staples. Okay, consumer staples, XLP from Yahoo Finance. Great. So reminder, this is part of our Pro configuration here, and we have this new watch list scoring page where you can set up any group of assets that you want to keep track of and look for cycles signals on. So I just created one called portfolio, and let's see, where did it end up on the page? Index. Here it is. And then I can go check in on what's going on with the stocks and ETFs that are in my portfolio. So I can take a quick look, click on any of them. Here's Berkshire. All right, we got coming into a cycle bottom here on multiple cycles, but also some concern about the momentum here. But on the whole, Still interested in Berkshire Realty Corp. Also coming into cycle bottoms here with pretty good momentum, waning a bit, but on the rise for sure. Not making new lows in momentum. Agriculturals, DBA, something that I'm very interested in, especially going into this phase of the longer term cycle. So just a way that I can kind of check in on things, see what's happening, make sure nothing looks really out of whack. And I can do these watch lists for anything that I'm interested in. So we will be exploring that more throughout the session today. So let me jump over now, though, before we get into more stocks individually, and let's look at some bigger term picture things that I've been watching in the markets and that are still my big picture. So this is the S&P 500. You know that I've been cautious on the S&P 500. And indeed, over the last few days, we've gotten a nice sell trigger on the cyclic RSI. I can blow this up for you some more, make it a little bigger, right? So nice sell signal here on the cyclic RSI over the past, since Friday, right? Since the jobs report came out on Friday, the market decided it didn't like it. And down we've gone. We've talked about how there's a negative momentum divergence here with the new highs, but not a new high in momentum. And we've gotten a nice turn down in the cyclic RSI now. So definitely not long the S&P 500 index right now, and cautious on equities in general. The US dollar has been something that I've been interested in and on the long side, and we've gotten positive momentum divergence here. So that's very interesting. We had a pretty big correction in the dollar on Friday after the jobs report, which wasn't fun for me. But in terms of a portfolio that I'd be interested in holding for a year or more, that was nothing, just a blip on the radar. Okay, we've still got cycles pointing up. We have an excellent positive momentum divergence with a very solid cyclic RSI buy trigger. Didn't even come back down out of the lines, moving up solidly. So I know a lot of smart people are very bearish on the dollar. The cycles and the momentum suggest otherwise to me, and I'm bullish the dollar. Also, last week, thank you. I forget who mentioned it, but we were very interested in, found this TLT trade. This is long treasuries here, longer dated treasuries, 20-year treasuries, right? Daily data here, multiple bullish cycles, very positive momentum, divergence, right? Moving up, momentum moving up, even though prices have been moving down. Cycles now moving up. So very interested in this trade. We also have a longer term cycle here that kind of adds to the bullishness. Might want to go out and add a little bit of extra data to that and just do our analysis fresh for that longer term cycle. We can see it shifting out a little bit, but still pretty bullish on this longer term cycle as well. And again, cycles are setups, but this cyclic RSI with the positive momentum divergence and the buy trigger is a trigger. So I like these trades, especially the dollar and treasuries. I know a lot of smart people out there are saying this dollar and treasuries are the last thing you want to be in, but I'm not so much a fundamentals and economist-driven investor, more on the cycles and technicals side. All right, and then gold is, of course, something we've been following for a while. We've been seeing a lot of concern from the cycles and even momentum in precious metals, gold and silver. Of course, we've got 268. You got 3 iterations of that cycle and 850 bars. But on the whole, let's see. I think we might want to get a little more data here just to get a little more clarity in this picture. So let's add a couple hundred more bars. I like how that 270 is held up, right? So what else do we got here? This 126 and 195. On the whole, though, cycles pointing down, but momentum, I would say, has not really convinced me that the end is nigh for the gold rally. So I'm a cautious bear on gold and also on silver. Let's take a quick look at silver, actually. Okay, also see that longer term cycle there on silver around 294, topping. Again, I think I'll add a little bit more data here to silver. Wow, that's a very stable cycle there at 300 in silver. And then the 128 and this 92, even this 206. So I think overall the picture on silver, let's add in the cyclic RSI here. You got the negative momentum divergence here. As price has gone up, momentum has not made new highs. And we've got a pretty solid cyclic RSI sell with a momentum kind of coming down too. So meanwhile, look, silver has not made a big correction yet. We're still near the highs. So caution is warranted, but these are the big picture things that are still on my radar. Last one I wanted to look at here is XLE energy. Pretty dominant cycle jumping out here. 170. Momentum picture is not great though, continuing to deteriorate. So I would love to be uber bullish on energy, but just not quite there yet. All right, so that's kind of the big picture that I've been keeping an eye on. We've also been talking about the geomagnetic data, expecting the cycles to turn up here. The cycles have turned up, but the geomagnetic data itself has yet to turn up. This is the latest data, August 4th, and it's still calming, going down. Not turning up yet. When it turns up is when we'd expect a little bit more unease to be building amongst market participants, but not there yet. All right. So back to our watch lists now, looking for ideas. Want to highlight a new scan that we did this week. And again, we're looking for bullish setups in equities here. And we got Costco, Sherwin-Williams, Kimberly-Clark, Take-Two. So we're going to just go through these and see if we can find some ideas to add to our portfolio. And the one jumping out here is Costco. So let's take a look. First of all, if we look at Costco, right, going back to 2023, it's been in a very, very solid uptrend. We've got a correction here for sure. Has the same kind of deteriorating momentum, but we do see a positive momentum divergence here on the lows. Shouldn't call it a momentum divergence. We just didn't make a new low in momentum, even though we didn't make a new low in price too. So, and the cycles are interesting. So got a nice buy signal on the cyclic RSI here and some bullish cycles on a stock that's been in a a pretty long-term uptrend. So Costco looks interesting to me. I'm going to pop over here to RiskSmith, and I'm going to go to my collection of cycles trades that I've been keeping an eye on. So I'm going to add Costco here now. Okay, I already have Realty Income and TLT in my portfolio, so I'm going to take those out here. We have this other collection here, cycles trades too, that we've been keeping an eye on for new ideas. We can clean it up a little bit. We don't need Berkshire because it made it into the portfolio, or DBA. Paychecks is redundant. We've got it in there twice. The dollar's in there, and XLP is in there. All right. So I'm doing this on a free RiskSmith account, which is why we can only have a few collections with, I think, 10 trades in each collection, but let's keep going. So we had Costco that we just looked at, which looked pretty interesting on the buy side. What else do we have? Sherwin-Williams, or Centene Corporation was kind of jumping off at a 7. So I love it when I find a new company that I really didn't know anything about. So Centene Corporation is in the healthcare industry, which is interesting, right? Had a huge drop here from 55 down to 26. So not necessarily a stock that I'd want to jump into. Big, low in momentum. So I'm not a buyer here, but the cycles are interesting and something that I'll keep an eye on and see if I might be interested in later on. What else? IQVIA Holdings, also in the healthcare space. Again, strong cycles. This is actually on weekly data here. So pretty strong cycles, pretty big move off the bottom. Interesting. I'm not totally sure about it. I need to do a little more investigation here. This 131 is pretty interesting, but not super confident here. But interesting. Think I'd want to keep an eye on that one. What else? Quest Diagnostics. Start over here again. 850 bars. Add a little more data to this one. So we've got this strong cycle here, 81 days. What else? Stability's not that great. 385. We'd have to get more data to really look at that one. In fact, let's add a little bit more data here. Oof, 395, that's out there. But stability is very good. Yeah. Let's try back from this low. One more time. All right, so this 381 is interesting. Pretty good momentum there. Bottoming, that looks pretty interesting to me. I'm going to add it to my watch list. Okay. See if we can find one or two more. Take-Two Interactive, technology stock here. Gaming company. Nothing too exciting there. Again, we scanned for these, looking for buy triggers, mostly in the cyclic RSI data here. So let me just this 112, interesting. You know, I like the momentum. You got a little buy trigger here, and just not really. Yeah, maybe. I think it's worth putting on the radar. All right, we'll add it over here. Oops, TTW. Oh, okay. Anything else? Sherwin-Williams, you know, home improvement, right? I think this is a pretty interesting setup. I like the momentum not getting lower. So yeah, I like it. All right. Okay, so now let's go back here. We're looking at this portfolio of cycle trades, and we're going to pull up our collections here of potential ideas that are have support from cycles and the cyclic RSI. So right away, I'm going to sort by correlation, and I see take two, relatively uncorrelated to my portfolio. WMB, what is that? Waste management? No, Williams Companies. Right, so they're in energy infrastructure. Okay, energy infrastructure sounds interesting. Quest Diagnostics, not too bad. 44 is getting pretty high. Let's take a look at take two one more time. Nope, just not really there yet. All right, no big new ideas yet. So let's see if you all have any interesting ideas for me. Maybe we can find something together. And by the way, investing does not, you don't have to do anything, right? You don't have to trade if you don't see a good opportunity in all of its facets, right? We do not have to do anything. The media and the markets want us to take action all the time. Sometimes not taking action is the best thing we can do. That is, you know, not taking action is a kind of action. So don't be disappointed if something doesn't show up as a great opportunity on our radar so far. But let's see what's on your mind. And we'll make a little list here of things that you're interested in. So we got, what do we got? SPY. Oh, we covered that. Well, will the SPY cycle affect the others? So it is definitely something that you want to keep an eye on, but we also know that there are sectors in the S&P 500, right? So consumer staples, real estate are looking on the bullish side. So yes, it's caution. We don't want to just be in equities right now for sure, but it doesn't mean that there's no, you know, fish in that sea. GDX, we could take a look at that. Bitcoin, sure. Sibane Stillwater, can you give me a ticker on that one or somebody? Or okay, SBSW. All right. Costco has great seasonality. Yes, Costco. Tigo. All right. FLD. You want to know how to use the FLD with the number of cycle. I don't know if I can cover that today, Rashed, but oh, uranium. Yeah, that's interesting one. It's also the longest. Why is it all? It has low strength or no sharp peak. Dan, usually for those longer term cycles, I will jump to the weekly data. So, 400 is kind of the max on the daily, on the cycle analyzer. So 400 is about 80 weeks, 400 days. So you can start to look around 80 to 100 weeks for those on the weekly data for those longer term cycles. Okay. Meta. All right. So DR, if you can kind of gather up those symbols and maybe shoot them to me on the side, I will look at some of those now and we'll see if we can find some new ideas. All right. So GDX. I'm guessing with the situation in gold that GDX is probably not uber bullish right now, and indeed, if there were a short GDX, I'd be interested in that. But again, I mean, look, we have the negative momentum divergence. We have cycles topping, so interested, but pretty bullish action on GDX. New highs are new highs, everybody. So not back up the truck short here, but definitely not time to go long in my read either. All right, we had GDX, Meta. I think we looked at Meta last week. $210. Very bullish momentum on that one. What else do we got here? 118 and 80. I'm not going short Meta. Cycles suggest potential upside. I'm just cautious on this big negative momentum divergence that we're seeing in so many of the equities and the overall bearishness from the index as well. So not my cup of tea for a long trade, but cycles, not necessarily saying look out below. All right, Bitcoin, BTC equals F. Bitcoin is really trading like a tech stock these days. I know everybody says Bitcoin is digital gold, but Bitcoin is not correlated to gold. And it is correlated to equities, particularly the NASDAQ and to some degree the Russell. I mean, just looking at the cyclic RSI and the momentum tells you caution is warranted. The cycles, though, say could be a little more life in this rally. Okay, even if we try adding a little more data here, like another couple hundred bars, just again, cycles say a little more life. I just don't like the momentum. Don't like it at all. So if you're long, I'm not necessarily a seller here, but again, like with most of the things we've looked at, not a back up the truck moment in these opportunities. All right, CCO, Kamiko, I like that. That is interesting to me, uranium in general, right? And energy. Okay. Interesting. I like the really clear cycle here, the 118 and 171. I like the big move in momentum off the bottom here. I don't like, not crazy about the cycles. Let's see here. Let's add a little more data, see if we can get any more clarity. 112, 177. It looks interesting to me. I wish the cycles were more supportive, but the momentum is pretty supportive. Although you do have this negative momentum divergence here also. So something I'd keep an eye on, maybe look for a buy, like a lot of these things, right? We probably should be looking for a buy on these in the fall, that is in the autumn, hopefully after a correction. So I'm not a buyer here, but I'm definitely intrigued. What else do we have? Tigo. Let's take a look at Tigo. What is Tigo? I have no idea. Usually when I have no idea, I jump over to Yahoo Finance. Millicom International Cellular, South America, it looks like. So maybe it's a telecom company. In Latin America. Okay. Could be interesting. Let's see. Certainly price action looks good. Momentum looks good. Cycles look pretty strong. But they're also kind of looking a little on the negative side. We could add a little more data. What do we got now? 1,050 bars. Wow. Had a huge correction. Let's push back a little further here. Yep. So let's anchor just on that top right there. Ish. And particularly this, say 193 here. I mean, the momentum looks pretty good. The cycles just don't. And from a cycle perspective, can't say I'm a buyer here, especially with the momentum below the upper band. So interesting, though. Definitely one to keep an eye on if we get a, definitely one to potentially consider on a dip into October. All right, what else have I? RCAT CLSK. Spectrum is very muddy here. I don't know what this one is. What is RCAT? Red Cat Holdings, products and solutions to the drone industry in the United States. Okay. I'm guessing this is a small cap company. Interesting. Let's see. Yeah, just, I think, add a little more data, see if we can get any more clarity here. I mean, this was a penny stock, and now it's kind of in the $10 range. Interesting. Just the spectrum is very muddy, all these different peaks here. But from a cycles perspective, I'm not having super high confidence, but the momentum's working, and yeah, looks interesting. You know? All right. I'm just going to add it to the watch list over here. So back to my collections. We'll keep an eye on it. CLSK. Thanks, Andrea. CLSK is Clean Spark. Bitcoin mining company. Andrea. All right. Speculation. Price action looks questionable. Cycles, some pretty clear cycles on the spectrum. 171, 278, 82. All look bearish with uber bearish cyclic RSI sell signal here. If I could short it, I'd be interested. All right. Oh, CCJ, not CCO. Okay. Wheat, ZW, yes. And EIX, Apple. Yeah, all right. Let's do wheat. Wheat is interesting, right? I've kind of already got it covered in DBA though, but man, look at that cycle. Very stable, lots of iterations. But right into a cycle top. But we do have, yeah, I don't know. Not quite there yet. Definitely keep an eye on it though. All right, CCJ, not CCO. Thank you. I would love for have a good energy play here. Yeah, it's had a huge move up already. Cycle definitely topping with a major sell signal on the cyclic RSI. So another one to put on the watch list for buying after a dip opportunity. All right. Any others? Wheat, we covered XBI in EIX. XBI. Interesting. Got a 122, a 177. Good move up in momentum. Not making new highs, but price hasn't made new highs either. XBI is what? Biotech. That reminds me, should look at Biogen. And let's look out a little further. Like, let's look at some of these on weekly data. XBI-W. Right. See, on the weekly data, something's off here. I got to get a refresh here. Okay. See, on the weekly data, I like this, right? Very constructive. Got positive momentum divergence here. Not a new low, but not a new low in momentum either. So on the weekly data, I think this actually looks pretty interesting. And the cycle there at 157 is very clear. You could even add this 295. So I like that actually. I like it. Another one that actually came up on one of our screens this week was Biogen. And if we look at that on the weekly data, you also see this 152 here, right? Bottoming. I don't like the new lows and the momentum there, but certainly from a cycle perspective, pretty interesting, along with this 80-week cycle. So Biogen looks pretty interesting. In fact, I'm going to add Biogen and XBI. I'd be more interested in XBI just because of the safety of the ETF as opposed to a single stock here, when the momentum on Biogen is a little concerning. It's better on the biotech index as a whole. So thank you for that recommendation. Let's add XBI in here. And let's pop over now and see how XBI might fit in with our current portfolio. So RCAT, interesting, not very correlated, and XBI, you know. Let's just, Now RCAT, yeah, let me show you something here. All right. Let's say I'm going to add RCAT to this portfolio. Okay, I'm not necessarily going to really do it, but this is an important thing to understand. And I'm going to wrap up here soon for today. But look at RCAT here, okay? To get $500 of exposure in RCAT, which is actually, we've been aiming for like 250 to 300. So that's high exposure here. So let's say I added RCAT to the portfolio. It does. So I got $500 of exposure for only an additional $247 of portfolio exposure. Increase my diversification some, so that's good. But I wanted to show you here for $500 of exposure, there's only, the position is only $729 over here. So I hope you can see that, but the position is only $729 for, you know, what amounts to twice the exposure of TLT. TLT here, the 20-year treasuries, only has $245 of exposure, but the position size is $4,127, right? So less volatile stock, as you can see here by the histogram, a bigger position size. More volatile stock, as you can see by the histogram, right? This is the distribution of daily returns. I guess I'm probably throwing a lot at you here again, but this is important stuff. Smaller position size. And UUP here, the dollar, probably the least volatile asset in this portfolio. The biggest position size, $8,500. Okay. So RCAT is, I need to know more about that, so I'm not going to add it to the portfolio here. But I am interested in XBI. I wish it were a little less correlated to my portfolio on the whole, but I think I like XBI here. We're going for about half that. So we'll go for 26 shares of XBI. Let's see what that does. All right, so XBI here. Where'd you go? All right, 26 shares gives us $250 of exposure. And our position value is about $2,000 to $2,500. So that's good. Doesn't hurt my exposure diversification much. Those are still decent levels. So for now, I think XBI is our best find of the week to add to our ongoing portfolio construction. So I hope you're finding this interesting. I want to wrap up today. Thanks for all the great recommendations that ideas. Please keep bringing your ideas to me. I want to share with you this paper here. I'll put a link to it in the show notes. The Power of Position Sizing in Portfolio Management, out of the Columbia Business School. And it's just a great little summary. Position sizing represents one of the most critical yet often overlooked aspects of successful portfolio management. While investors frequently focus on identifying winning investments or timing market entries, the decision of how much capital to allocate to each position can ultimately determine whether a portfolio thrives or merely survives market volatility. Folks, this is hugely important stuff. This is why I call it trading market cycles, right? Because it's not just about finding good setups or even good triggers. It's ultimately about having a portfolio of ideas with position size and diversification. This fundamental discipline bridges the gaps, right, between investment theory and practical wealth preservation, serving as the primary mechanism through which investors control risk while optimizing returns. Whether for individual investors, hedge fund managers, or portfolio managers, position sizing plays a critical role in preserving capital, optimizing returns, and navigating the inherent uncertainties of financial markets. Very, very true stuff. So again, we'll put a link to this in the show notes, but there's a lot of good stuff in this paper talking about the common biases, right? Loss aversion and the disposition effect, which hopefully you've heard me talk about that over the years. And we're doing in particular risk-based position sizing. Bases position sizes on the risk of each investment, right? That's why an investment in RCAT is a lot smaller than an investment in UUP, even though the risk levels are comparable. Okay. So psychological considerations, proper position sizing helps prevent emotional decision making. Absolutely. Panic selling or greedily over-investing can sabotage even the most promising portfolio, right? When position sizing is optimized, it acts as a psychological buffer, helping investors maintain discipline during turbulent market periods. That is the key. So let's wrap it up here for today. If I miss some of these tickers, DR, please grab them and we'll add them, look at them next week. Again, we didn't find any really compelling opportunities today, and that is just fine, okay? Finding things to add to your watch list to keep an eye on for maybe, if we get a summer into early fall correction, that's great. We don't have to take action today. But in whatever you do, you got to know your time frame. Building out a portfolio for a year means nothing about what happened to the dollar over the past few days. As a short-term trader, I'm feeling the pain of being bullish on the dollar and, having the lows tested, but we're getting some positive momentum divergence on that. That's short-term trading. That's not building a longer-term portfolio. So appreciate you all sticking with me. I know we're covering a lot of stuff here, but ultimately this is what investing is all about. And I can't just, throw out a bunch of new ideas without telling you how the pieces of the puzzle all fit together. So we'll get back at it again next week. Thanks again for joining us. Please subscribe, like, tell your friends, spread the word. Appreciate you joining us here on Cycles TV, and we'll see you next week on behalf of the Foundation for the Study of Cycles. Have a great week, everybody.